Now let's come to at the money option. Option which is closest to current spot price is called as at the money option. It may or may not have intrinsic value. At the money option has highest amount of time value. This option is most reactive to changes in market conditions in terms of percentage change in value of option. These facts are very important to understand. At the money option is most reactive to changes in market conditions in terms of percentage change in value of option, not in terms of amount but in terms of percent. It is most reactive. Okay. If Nifty is at 17,510, which options are at the money? Can anyone tell which put and which call will be at the money? Closest to CMP is 17,500, where there is a strike of Nifty. If Nifty is at 17,510, 17,500 call and put both will be at the money because it is closest to the market price. So if 17,500 is at the money call, how much will be intrinsic value in it? As spot price is higher at 510 and we are looking at strike of 500, intrinsic value will be 10. For put, 17,500 put, it is at the money but slightly below CMP, that is slightly below current market price. So it will be minus 10, means there will be no intrinsic value, it will be 0 because intrinsic value cannot be below 0. Let us see moneyness summary. There are 3 moneyness types. In the money calls, these are calls at strike below current market price or current market price is above strike price. Because of this, intrinsic value is always present in the money calls. In the money puts are puts at strike above current market price or current market price is below the strike price. Because of this, intrinsic value is always present in the money calls. Now, out of the money calls are calls at strike above current market price or current market price is below strike price, and because of this there is no intrinsic value or it is 0 in out of the money calls. It is only extrinsic value which is present in out of the money calls. Out of the money puts are puts at strike below current market price or current market price is above the strike price. Because of this, intrinsic value is 0 in out of the money puts. And at the money calls are at strike which is closest to current market price. Intrinsic value may or may not be present. At the money puts are puts at strike closest to current market price and intrinsic value may or may not be present. Let us summarize everything till now, whatever we have learnt. Long means buying. It is not related to bearish or bullish for options. Short means selling or writing options. It is not related to bullish or bearish in options. So long and short means long is buying, short is selling. Buyers have right to exercise and sellers have obligation. Call buyers and put sellers have bullish view. So calls and puts both can be used for bullish view. On the contrary, put buyers and call sellers, they have bearish view. So calls and puts both can be used for bullish as well as bearish view. Option buyers are debit traders and option sellers are credit traders. Risk is limited for option buyers and it is theoretically unlimited for option sellers. Option expiries for monthly are called as front month, next month and far month expiries. Option strikes are noted as in the money, at the money and out of the money. Option premiums have intrinsic value component and extrinsic value component. Are there any questions about this? There are two ways to trade options. One is trading options based on knowledge of option behavior. Other way is based on knowledge of technical analysis. Let us see how options can be traded without technical analysis. Many people trade based on option chain. Option chain is one good tool which can be used to analyze underlying market conditions in options. It is useful for understanding behavior of participants in option trading. There is very good information in option chain which we would decode during the separate session based on option chain. We need NSE website and 2-3 more websites to understand option chain. Then many people trade based on adjustments. There are 6 to 7 different adjustments which we will see in different section. Understanding these adjustments would be easy once we understand option Greeks. Understanding option Greeks is important aspect of trading in options. Otherwise, trading options with long-term view would be difficult task for positional traders. There is a big role of volatility in option pricing. Volatility is called as Vega and Vega decides whether one should buy options, sell options or deploy option strategies. We'll see this later. Now just remember these things. We'll come to these things in a structured way. Apart from these methods, I have developed my method as well. It is based on chart of options premiums. It was earlier difficult to show this on chart, but now I have come to know how to get the chart. I will share this information at the time of discussion based on this aspect. Patience is biggest virtue of a trader. This course is planned in a structured way and will go to our destination step by step. Once everything is covered, you will understand that it is all logical. Please have a patience to go through all aspects of understanding options and methods of trading in options.